there, and welcome to an instructional video to show you how to calculate your break-even point. So you're going to want to start with an income statement. Now, here I'm looking at my income statement with 2 years worth of data. You don't necessarily need to have 2 years worth of data. You can look at a month, a quarter, a year. The reason I'm not a huge fan of looking at just 1 month is because there can be things that happen within the month that are extraordinary. For example, it could be a month that has 3 payroll periods, or it could be a month that has, if you're a weekly biller, 5 billing cycles, so your revenue looks higher than normal. It could be a month if you're cash basis and you paid a large insurance bill or something like that. So there's a lot of things that can happen in a single month that can kind of misrepresent your normal cash in and cash out. And so usually I would want to look at like at least a quarter or at least a full year in order to determine like kind of an average. So here we've started with our income statement. We have our tuition for 2019-2020, and really this is, kind of my dummy spreadsheet that I use. In reality, you should probably be looking at 2022 when you're doing this in order to determine what your break-even point is. The reason that we're looking at multiple years and a little bit further back is because this sheet is also looking at how we've spent according to like the buckets of like occupancy, staffing, program, and admin as well. So we have our tuition right here, and then we have all of our expenses right here. To get to what our total net income is. And then the first thing we're going to do is I usually add in a few lines in here, like we'll insert lines somewhere in this worksheet, and I will add in basically whether or not these expenses are fixed or variable. And by fixed, we mean, do they change with the number of students that are enrolling, or do they stay the same no matter how many students we have? So obviously like office supplies, because it's more administrative, probably not going to increase based on number of students that we have in the building. Whereas groceries, that's definitely something that's going to increase or decrease depending on the number of students that we have. And then I also will put in a place for like, is it an administrative cost? Is it a program cost? Is it an occupancy cost? Is it a staffing cost? And that way I can kind of look and determine what my percentage of expenses to revenue fall into those categories. And then I'm just going to set myself up with these handy dandy little kind of charts. And basically what I'm doing is these are just sum if formulas. So for example, here, like I have my administrative, occupancy, program, and staff, and then I have my benchmarks where I want them to land for my center personally, and then what actually happened. And so with that sum if, it's pretty straightforward. I'm actually just going to go ahead and get rid of the sum if here. And so I'm going to hit this FX button, and I'm going to choose sum if as what I want to do. And the first thing it's going to give me is my range. What cells do I want to have evaluated? Well, I'm summing if this has the word administrative cost in it. And so the column that actually has the text that we're wanting to look for is the range of cells that we want to have evaluated. So I'm going to go ahead and pick everything in here that we've kind of labeled that way. And then the criteria, I can either type in administrative cost and hope that I spelled it right. And I usually am the queen of spelling things wrong, or I can simply go like that. But in order for that to end, well, anyway, and then the sum range that we want to look at. So the range that we want to have summed up. And so since we're looking at 2019, we're wanting to look at the 2019 expenses that correlate with that, and voila. And so really quickly, what this is showing us is that about $8,000 worth of these expenses are related to administrative in 2019, because it's summing it up if it says administrative cost. But then what we have to do is divide it by revenue. And that's where we get back to wanting that to be a percentage. And so we can see it's 5% of revenue. And we can do the same thing with the occupancy, with the program, and with the staff. The only thing is, if you don't want to have to build out every single one of these formulas individually, there are a few things you have to do in here. So you can kind of see in my example that I've done some locking. And so what that means is that I've said, I've locked on this with that little $sign to say that it can't, once I kind of copy and paste the formula somewhere else, it cannot leave this column K for when we're looking at this. Same thing, it can't leave, because I have the locking or the $signs on the revenue, it will only pick that place for revenue. And same thing with the D, because these are both have a $sign, they're kind of locked on that D, which is, I think, a little bit more advanced than we want to get. So if you know how to do that, great. If not, then just go ahead and build out that formula. So again, if we're building out these formulas, we're going to go to FX, we're going to go to SUMIF. The range that we want to look at is where the letter, where the tags are, where the categories are. The criteria for this one is going to be occupancy. And so we can just click on that K6, it'll say occupancy. And again, it has to be spelled correctly. So if anything is misspelled on either one of these things, it's not going to catch them. Excel's not that smart. It's a perfect match. And then the sum range, again, will be the 2019, because we are just looking at 2019 right now. Great. And then we want to divide that by the total amount of revenue. And again, that's how we get to the 5%. And you can see we've done that for 2020 as well. Same formula, same FX, except this time the only difference for 2020 is that instead of picking the 2019 column for the third little area in the FX box, we'll pick the 2020 column. Okay, so we can see here administrative costs are okay, occupancy costs are extremely high, staffing costs aren't completely out of control, but they're definitely creeping up. And so that's definitely something in program cost too. So we can definitely look at that. We can see here that 94% of our total revenue has gone to expenses, which means we only have a profit margin of about 6%. And then we can do a very similar thing here with the fixed costs. And so here we are doing that same SUMIF, and you can see I've picked, okay, we're going to evaluate whether or not this says fixed. This time I didn't do just copying to the word. I actually typed in fixed. Again, it can kind of work the same way as long as this said fixed and this said fixed. Wouldn't work because this says fixed cost instead of has to be exactly perfect. And then we're evaluating this, the total expenses for 2019. And then I'm dividing it by 12, because what I'm wanting to look at is our monthly fixed cost on average and our monthly variable cost on average. And so we can see right here for 2020, when we do this SUMIF, and we divide it by 12, our monthly fixed cost is $10,000, and our variable cost here, again, looking at variable for 2020, right here, divided by 12, is $96.12. So right now our average costs are about $20,000, $19,620. Okay, so now I'm going to move over to my break-even analysis. And I can look at this monthly, or I can look at this annually. I prefer to look at it monthly again, just because it's a little bit easier to kind of wrap your hands around it if you're looking at it on a monthly basis. So here we've got our fixed costs. So now I'm going to go ahead and pull this back over to the fixed costs here. I'm going to get rid of these. Do that. That seems easier. If we were assuming that our owner's salary is not being paid through payroll, we would want to include the owner's salary in here. That being said, in this example, the owner's salary is being paid as part of those fixed costs. We can see the payroll administration, that is the owner's salary. So we know that in this case, they're already, like, their salary is already being accounted for. So we don't necessarily need to break it out separately. However, if the owner is not being paid through payroll, we would want to add that in. Okay, so our total fixed costs here are $10,000. And then our average sales price per unit, which would be like one child per month, would be $1,300. And again, because we're looking at everything on a monthly basis, everything has to be by month. So it would need to be the sales price by month, even if you bill by week. Again, you could look at this at a weekly level, but I think it might be a little bit harder to do that, but that's completely up to you how you want to handle that. So yeah, $1,300 per month on average. I know we've got different price points all over the place, but when we're looking at it very high level like this, we kind of have to look at the average. If we were breaking this down by essentially like age group, that would be great if we could get that into a little bit more detail, but that would also mean segregating out the fixed costs by age group as well. And then we would want to have our average enrollment here, and the reason we're doing this is in order to be able to look at what the variable cost is, because again, we're looking at the variable cost per child enrolled, not as an aggregate. So we want to look at during the time period that we're measuring. So for the entire year, we've had an average enrollment of about 16 students. And then we have a total of 50 students that are available to be able to enroll. So what we're doing here is we're going to go like variable, what was our variable cost over here? And then I'm going to divide that by our average enrollment. And that's going to get us to our variable cost per student. And what this is showing is our break-even point is at 14 students. So that's extremely helpful information for us. And then here, what we're looking at is our maximum possible revenue would look at the sales price multiplied by our units available. So the max that we could ever, under our current price point, the max revenue we could ever have is $65,000. Again, our fixed costs are going to be $10,000 per month. And if we are fully enrolled, so you can see we're taking those 50 units by the 601.27, our variable costs under that situation would be $30,067. And that would leave us, if we were completely enrolled 100%, that would leave us with a monthly profit of about $25,000 or $300,000 per year. The other thing that we can glean from this is that once we have 14 kids, which we already do, the difference between this $1,300 that we charge on an average and our variable cost of $601 is essentially how much extra we will make for every child we enroll. So $1,300 minus 601.27. So essentially for every new child we enroll, our profitability should go up by about $700. And that's very high level. We can definitely do these kind of exercises on a classroom by classroom or on a age group by age group level, but it just will mean breaking out the information on a more detailed level. Because right now, we're just looking at the high level income statement, whereas we would have to determine how to break out this high level information. So how much of this payroll goes to this classroom or to this age group? How much of the rent are we allocating to that? And making sure that the entire rent, because it is a fixed cost, that it's being completely allocated out. And whether that's, to give a certain amount to every age group or a percentage or however that works. But you just have to kind of make sure that all expenses that are here in this high level financial statement are accounted for if you do decide to break it out on a more detailed basis. All right. Thank you very much.